Hey, MSP owners and growth pioneers, welcome to another episode of the $5 million Milestone Podcast, where we uncover the real strategies to scale your managed service business to and beyond the $5 million mark. Today, we're thrilled to have a powerhouse guest in the studio, Baxter Lanius from Alternative Payments. Baxter brings a fresh perspective and innovative payment solutions specifically tailored for the MSP industry, helping you streamline operations and fuel your growth. So without further ado, let's dive in. Hi, Baxter. Welcome to the program.
Thanks for having me, guys. I don't know if I'm a powerhouse guest, but I appreciate the descriptor.
Yeah, for sure. No problem. So let's dive right into it. Can you walk us through your journey for creating alternative payments?
Yeah, it's a great question. I've been in the MSP industry and the many other industries really ever since I started my career in and around 2012. So coming up on 13 years. I worked for a very, very large private equity fund that acquired one of the largest MSPs at the time, slash VARs, a company called Presidio. I then spent, after that acquisition, a tremendous amount of time continuing to do research in the IT services space more broadly. Uh, again, we then decided to make a pretty large investment in a company called Optiv Security, which is one of the largest cybersecurity VARs. And then we acquired Tech Data, which is one of the largest global VARs. And then we merged Tech Data with TD SYNNEX. So this is over a period of time of about 8 years. We did 3 or 4 very, very large acquisitions. And I probably spent close to 40-50% of my time in IT services looking for opportunities, and 40-50% of my time in a whack-a-mole of other industries, from funeral homes to intellectual property acquisitions, really, really interesting, unique industries. And what I really saw was that, what was happening in the software industry from a billing and payments, right? And how Pronto Marketing gets paid and on many other software platforms was not running in parallel to what was happening in the IT services market. And the IT services market was very much behind in that proliferation of technology and software applications and simplicity from a invoicing, billing, and payments perspective. And I left my private equity job to build alternative payments, really with that premise of how do you match and create a system and a systematic approach to invoicing, billing, and payments that runs in parallel to what's happening in the software ecosystem. And one of the key differences in these markets is that the IT services market typically runs off of invoice-based payments. So an invoice is created, a payment is then subsequently taken and then applied to that invoice. Whereas in the software ecosystem, for the most part, it's just an embedded payment, right? So there's not really an invoice that exists. It's just a payment that's immediately applied. And so that has a lot more simplicity. Whereas in invoice-based payments and the way in which MSPs charge their clients and get paid is a much, much more complex workflow. And so we've built this platform to really be purpose-built for MSPs, to really align with the workflows that they experience, from quoting to invoicing to billing to payments to reconciliation, to automate that workflow, to save them time, to save them money, while also really getting them paid faster. And so it's been an exciting journey. We're now a team of about 50 people. We have the largest payments team in the industry. We're processing north of about $600 billion annualized. We support just over 600 customers, MSP customers today. And in 2025, we're very excited because we're making an even bigger push in the in-person events and conferences. So we're excited to do this podcast, and we're excited to see everybody and meet everybody in person who we've obviously been, socializing with in a remote environment over the last couple of years.
Yeah, thanks, Baxter. That's a really quite a journey there, and you mentioned some pretty big names there, and I think with alternative payments, you sort of maybe took a different direction in terms of what kind of MSPs you work with. are you still working with such big MSPs, smaller ones? And essentially, what are the biggest challenge that you see MSPs have with their back office today? And what about their billing platform specifically?
Yeah. And this is a great, it's interesting. The MSP market, as we all know, is very large. It's growing at a rapid rate, right? It's growing 10 to 15% a year. It's highly fragmented. And in the US and globally, right? This is not just a US phenomenon or a European phenomenon or an Australian phenomenon. The characteristics and attributes of the market are very similar from geography to geography. There's some differences in the Europe and the UK. But our goal is to work within the confines of your business. And what I mean by your business is you may be running a one-person shop, and you may not be having a lot of invoicing. You may be running a 50,000 person shop, and you may be having a lot of invoicing. The problems are very similar across the board. And the question that I think MSPs should be asking is, how are they invoicing, right? Are they using a PSA? Are they invoicing out of their accounting software? Are they invoicing in a Microsoft Word document? And how are they getting paid for that invoice? And how much time are they spending within that process? And the question really becomes, if you feel like you're spending too much time on a weekly basis, a monthly basis, then you're really in need of a more automated, seamless solution. And now if you're a one-man shop and you're only invoicing, 5 customers a month, the pain of that invoicing process is probably not as intense if you are invoicing thousands of customers a month. So, the pain points that we see oftentimes is all around the process between quoting, invoicing, billing, and payments. And oftentimes, the most challenge that MSPs face is not in the payments workflow, which is really where we're focused in automating. It's really in the quoting workflow as well as the invoicing workflow. And why is that? That's because people are plugging in and APIing into a lot of different solutions and systems. And there's a lot of room for error because a lot of these systems were built in on-prem environment. And so the APIs do not flow in real time in a two-way nature, which then creates a lot of complexity for that invoicing component to be created. And the invoicing component is what we would consider to be the source of truth. And if your source of truth is not accurate, or if there are certain edge cases in which it does not become accurate, then that creates downstream problems. So the challenge really where we see it is in that invoicing component. Now, in the payments world and in the billing world, there's some friction, right? You'll have clients who don't want to pay online. They want to pay via check because they don't trust the system. There's some clients who prefer to pay via credit card. And so then that pushes fees to you as a business owner, and you're, paying 3% to process a credit card. So there's some challenges around that, but that's more of a workflow component, and that's things that I think you can really fix. Whereas the API invoicing accuracy are some of the challenges that we see on a consistent basis that are really just industry friction that we're really trying to support and help and try to figure out how can we improve this. So one of the ways we're doing it is we're building a syncing product that helps MSPs sync data from their PSA to their accounting stack. And that will simplify the invoicing process and ensure that your data accuracy is appropriate along the way.
Yeah, thanks a lot for that, Baxter. And I just wanted to take just a kind of a step back and a step out from the minutia of payment processing, and just really kind of just talk about what's the lowest hanging fruit that MSPs can grab to get from $1 million to $5 million in revenue.
Yeah, this is a great question, and I think that it really comes down to one area that MSPs are really not comfortable in. And it has nothing to do with payments. It has nothing to do with billing. So take my opinion as a grain of salt, because I'm not an expert in the space. You know, the guys at Pronto, Justin, Pierre are much more experts. But, you know, it really comes down to sales. And it's about building on your momentum as a business, as a founder-led sales organization, building on referrals and not being scared to ask for referrals from your existing client base, right? Because, you know, I think, and this will get to another question that we'll address later on, but it's a fundamental approach. And what I mean by a fundamental approach is, if you have $1 million of revenue, let's ask ourselves, on average, how many clients do we have? And what are our average contract values? Typically, what we see, and just to keep numbers simple, is average contract values of probably $2,000 to $5,000. So let's use $5,000 because it's a little bit of an easier number to do math with. That's a monthly number. So you have to multiply it by 12 to get to $60,000 of an ACV, right? An average contract value. And then $1 million divided by 60,000, you know, it's a little over, it's like 18 or something in that ballpark. So you have 18 customers. You're bringing in $60,000 a year from all those 18 customers. So how do you get to 5 million? 5x, right? 1 to 5 is 5x. So you can do it in two ways. You can multiply your customer count from 18 times 5, which is 90 customers, or you can increase your ACVs from 60,000 times 5 to 300,000, or it's some compilation of the both, right? You could increase your customer count by 2.5 and increase your ACVs by 2.5, and you'll get there the same way. So how do you get to $5 million? If you're already at $60,000 ACVs, you know, I would argue that it's probably harder to increase, depending on your customer size, your ACVs by 5x. So let's just focus on increasing your customer count from 18 to 90 in this example. It's all about referrals, right? It's all about, how do you go to those 18 customers? All right, Justin, you got to know a bunch of people, right? I mean, you have friends here, you have friends there, right? Like, you got to give me at least one referral, assuming that my performance is up to par and up to snuff. And you can't be scared to ask for that referral. You also can't be scared to set yourself up for success with that referral, right? And what I mean by that is really serving Justin a silver platter, the proverbial silver platter, and saying, hey, here's my blurb on what I offer. Here's the type of client that I want to work with. And can you share this with that potential prospect? Maybe even jump on a call as a threesome, right? And really understand what the offering looks like. And so referrals, you know, ideally, right, you're getting 1 or 2 referrals per 18. So, you know, you go from 18 to 36 pretty quickly. You go from 18 to 36 to 54 pretty quickly. And then, you know, once you're in the kind of 30, 40 range, you're in the $2 to $3 million range. You know, the question is, how does your model adjust from founder-led sales to really having a sales an effort or a marketing effort, right? And what else are you not doing that you can be doing to get to the $5 million mark? But it's really around sales. It's really around marketing. It's really around growth. It's really around narrowing your focus and having a reason to win with those clients. And that's where we see a lot of MSPs have a lot of success. But it's a challenging road, because, you know, what typically people say in the industry, you know, it's really hard to grow your business organically 20-30% a year. And so if you're going from 1 million to 5 million, you know, 20%, 30% of $1 million is only 300,000. So 1 year later, you're only at 1.3. You know, you're at 26% of 5. Not much beyond that.
Yeah, no, that's a great answer, Baxter. And I think when you're at that size that you mentioned, when you're at 18 customers, that's still a fairly manageable client, you know, portfolio. And so you likely still have very close relationship with those people. You really know, where you are in their journey, and if your service is really driving value for them. And I think even if people say no, and we've had that happen to us, and I think someone said, "Oh yeah, I'd be happy to like give you a review, but I think right now you're still at a 9 and not at a 10, or like for me to give you an online review, sort of an online referral, so to speak, I need to see those three things happen from you guys." And so, at best, you get a referral. At worst, you get some actionable advice, and you have to work harder anyway to retain that client. So I don't think there's a lot to lose in asking for that. And we see those industry reports. I think ConnectWise came out with their MSP marketing report just recently, and that's no big surprise there. Of the 1,000 MSPs they surveyed, essentially 50% were saying that referrals was still their top source for new business. So it's no big surprise, but I think putting a systematic process can really pay dividends. And there's a lot of different ways to do that, quite frankly, today.
Yeah, totally. And it's it's I think the challenge in sales and marketing is there's a lot that you can be doing. And there's a lot you're doing today from a day-to-day perspective, right? Just in terms of servicing your clients. So, taking a kind of a wide lens approach and going after everything is likely not going to be the best strategy, because, I don't want to say you're going to fail at everything, but you're going to, your results are going to be 4 out of 10, 3 out of 10.
Right.
So where can you really add value? Where can you really generate a lead, generate a win? That's where I think the referrals come into play. But we've been working with a lot of different companies and seeing a lot of different results. And SEO and marketing and paid search seems to also be working for a lot of folks that are very focused, very localized, and very focused on specific markets. I was just talking to somebody the other day, who was like acquiring customers for like $100, or leads for $100, right? So you need to figure out how those leads convert, obviously. But if you're acquiring a lead via some marketing channel for $100, I mean, that's pretty stellar, especially if your ACV is 60 grand. Now I doubt those numbers are real, like 100 to 60. It seems too good to be true. But nonetheless, right, there's a lot of different channels, and you need to figure out, what can you achieve at a 8 out of 10, 9 out of 10 level to accelerate your business, if that's ultimately your goal.
Yeah. And you get different lead qualities as well, depending on the channel you go down, right? So like if you're going the referral route, usually, it can be a little bit hit or miss, but I'd say, if it's a good lead, if it's a, typically you'd get a higher success conversion rate on a referral lead, as long as it's more or less qualified for what you're offering and what they're looking for. So
yeah, totally.
Yeah. So switching gears a little bit, what are the top 3 or 5 revenue performance metrics that MSPs should track?
Yeah, this is a good one, and I think I'm a simpleton, really, and what I mean by that is I like to keep things very simple. I think the math equation of how do you grow your business should be really close to you and in your head. And so it's formulaic, right? There's number of customers, there's ACV, there's how many customers do you lose or do you churn on a monthly basis? There's what percentage of that revenue or that contract is recurring versus non-recurring, right? So what's the quality of that revenue? Because ultimately, taking a huge step back, what's the goal? The goal is to have a business, I don't care how many customers you necessarily have, but the goal is to have a business where you're retaining those customers, 100% of them, month after month after month, year after year after year. And the contracts that you have with those clients are 100% recurring in nature. And there's very, very limited variability in those contracts. And what does that mean? That allows you to really, really easily and quickly project what's your MRR, right? Monthly recurring revenue. And the reason why that's critical is because then that allows you to build a very, very consistent business that allows you to then understand how you want to build on that layer cake and continue to build to grow your revenue base. So when you talk about like KPIs and what metrics I think are most important for an MSP, a lot of these won't necessarily surprise you guys or the listener base here, but one is really recurring versus non-recurring. So, what percentage of your revenue is fully recurring contracted revenue? Two is similar to on the revenue side, which is average contract values, right? So how much on average are customers paying you? Are you in the $200 a month range? Are you in the $3,000 a month range? Are you in the $5,000 a month range? And then three, which we talked about before, is your churn rate, right? Are you retaining 100% of your clients? And the reason why I picked those is because it allows you to then evaluate where you should be investing your time and resources and money and team's time to further grow the business. If you are retaining your customers at 100% of your time, clearly your service is really, really strong. Clearly your product offering and clearly your approach is very, very strong. And so maybe you can reallocate your time to growth or sales. If your average contract values are average or middle of the run, then maybe you don't, you can spend time there or you don't want to spend time there. It depends on your approach, but there's obviously an opportunity to be above average. And then, similarly, from a recurring perspective, right? If 100% of your business is recurring, then you're in a very, very good position. Now, I don't think anybody's business is 100% recurring because there's always some sort of one-off cost. But if it's 90% recurring, you're in a really, really good position. And then again, you can figure out how to allocate your resources appropriately to grow your business. Again, if that's the approach that you want to be taking.
Yeah, no, that makes a lot of sense. I think those are very similar metrics. We track even ourselves for our own business, and I think
Totally.
our business is actually fairly similar to MSPs themselves. So super important metrics.
Yeah, and that's it's funny. It's funny you brought that up, and it just made me think of something because I think what MSPs don't realize is that a lot of the vendors in the market run very similar business models to them. Now, there's obviously a lot of complexity in what an MSP does. There are a lot of different forms of revenue, but MSPs are not necessarily totally unique in the business, and we can all learn from one another. And one of the things that I really love about going to conferences and in-person events is sharing those stories of, alternative payments. Like, what does our business look like? Our business is, we have a subscription, right? And it's a subscription SaaS fee, right? That's no different than recurring revenue for an MSP. We also have an average contract value. That's no different than an MSP. Now, we have transactional revenue, which is non-recurring in nature, or it's reoccurring from a market perspective. It's a little bit more recurring than one-off revenue for an MSP. We also have onboarding fees. We have payment migration fees. So there's a lot of learnings that I think we can all learn from each other that, add value and give people a little bit of a different perspective on how to grow or how to think about growth, or how to just run a better business generally. I always laugh when, there are MSPs at a conference around a table and they're kind of like ignoring the vendor a little bit. Like, the MSPs, from my perspective, should ask the provocative question of like, well, how can you grow faster? Like, what are you doing to grow your business faster? Because we can all learn from one another to really facilitate growth for everybody's business at the end of the day.
Yeah, no, absolutely. I think when I look at your pricing, it's very similar to some of what we do for, Google Ads project, for example, where we start with an onboarding fee and eventually we get into sort of recurring retainer mode. So very, very similar pricing structures there. And I think many MSPs also have similar use cases where they do some initial consulting, onboarding, and then get into their recurring retainer mode.
Totally.
And at Alternative Payment, you work with MSPs of varying sizes. So some are smaller, and you were telling us, some are as small as $500,000 in annual revenue, and really kind of making that transition from using a spreadsheet to modernizing their financial back office, all the way to 30 million plus in annual recurring revenue. So do you see any particular difference in the financial and accounting hurdles that those MSPs are facing, and what should an MSP looking to grow anticipate from a FinOps point of view?
Yeah. The financial operations is a super important area that all businesses, not just MSPs, need to focus on. Pronto needs to focus on it. Alternative Payments needs to focus on it. I just listened to a podcast of this founder and CEO of FedEx. FedEx needs to focus on it. Apple, the list freaking goes on. But the challenge, I think, for MSPs who want to grow and who are under-resourced today, right? Which I think is kind of probably that $100,000 revenue business to $2, $3, $4 million, maybe even $5 million, is again the allocation of time and the allocation of resources. And where is your biggest return for your capital and for your time? And oftentimes what happens is the MSP owners, again, whether you're $100,000 or you're $1 million or you're $5 million, do not invest capital in financial operations and accounting and finance, because the perspective is that they are not going to help me grow the business. What I think people don't understand is the fundamental, number of customers, ACV, churn, percent recurring, percent non-recurring, is actually a formula that allows you to say, where should I be investing and how should I be growing? And if that formula or if the inputs are not accurate, then your output is going to likely produce an incorrect result, or your decision-making process is going to be skewed. So there's a variation of financial operations. There's very, very sophisticated organizations, right? Using the FedEx example, a global business that employs something like, I think, 70,000 employees, that's shipping, I think the number was something like $2 trillion of goods globally on an annual basis. They obviously need really, really sophisticated financial operations and reporting. For an MSP that's doing $1 million or $2 million or $3 million or $4 million or even $5 million, I think books and records are really important, and working with a really, really strong MSP focused accounting firm is really, really important. That makes sure that they're closing your books on a monthly basis, make sure that you're paying yourself in an appropriate manner, making sure that your gross margins and allocation of expenses is appropriate, using those fundamental financials and comparing them to competitors or other MSPs in the market to figure out, are you below the benchmark? Are you above the benchmark? And then from there, again, assuming that picture is really, really transparent, whether you're $1 million or $5 million or even $10 million MSP, saying, well, where are my growth opportunities, right? Where can I reinvest? Is it customer count? Is it improving my service? Is it adding cybersecurity in a new line of business? Is it, invoicing, billing, and payments, where there's a lot of friction and there's a lot of manual time? But that layer cake and that platform that you're building needs to be really, really clear. It needs to be hopefully automated, and that will then allow you to make the best decisions possible. Unfortunately, we see a lot of issues and a lot of challenges that MSPs face in kind of getting to step one and making sure that that financial package and financial profile is ready to go, because a lot of people do not believe that it adds the same value as a referral motion or as hiring a salesperson. And ultimately, I believe that that's kind of like a quicksand, because you don't worry about it, then you get to a specific size, you still don't worry about it because you don't think it adds value, and you kind of continue to sink, and then all of a sudden you wake up one day and you're like, holy crap, I need to rapidly get this in good order.
Yeah, no, absolutely. I mean, when it comes to sales and marketing, you need to know your numbers as well. Is there going to be enough volume for this SEO campaign to make sense? And, what is my conversion rate going to be? And how am I going to, get my return on my investment? Those are all numbers you need to know. But I think the same is, even more true, I think, for financial operations. You need to know, are those services profitable? Should you be launching new services, or are you actually growing yourself too thin and you're actually doing too much at the expense of profitability? And so I think having really clear visibility into those financial numbers can help you make the right decisions from a growth perspective. Should we do more services? Should we invest in X service or Y service? As well as, even if you have just 18 clients at this point, you can start probably seeing some trends and profitability based on the industry that your clients are in. And obviously, the more they grow, I think the more you want to kind of keep an eye on those financial numbers as well.
Yeah, or are you getting paid on time, right? Like, there's some very basic questions that if you don't have your finger on the pulse, or you don't have a dashboard that allows you to monitor the data, or the data is just not accurate, like really makes it challenging to run a business. And so, one of the things that we invested on early on is to really provide those dashboards for our customer base. Now, whether they want to use them or not, they're available as part of every subscription. There's an insights tab, which allows you to very quickly see recurring revenue, your revenue by customer, what percentage of it is automated, what are your days sales outstanding, to more quickly put that data at your fingertips to then run a more efficient, better business. So it's it's certainly an exciting time. I think, if I look across the landscape of MSPs and where they're underinvested in, it's really this financial operations category, finance and accounting. I think people understand sales, they understand marketing a little bit. There are a lot of providers in the space that support them in those areas. They obviously understand technology. They obviously understand service. There are obviously variations of quality and capabilities. But finance and accounting, we're really, really excited to continue to educate the market, continue to help the market, continue to hopefully lead the market in not only our software product, but the resources, the experts that we make available to the market, so that we can all build bigger and better businesses.
Yeah, no, that's a very exciting kind of project that you guys have, and one that we can really relate to even ourselves, because managing our financial operations is something that even I deal with myself every day, and we really keep an eye on. And one of the things we've also really been trying to kind of educate our own audience is, you need to know your numbers, like I was saying, so that you can budget properly. And you need to start with your overall company financial budget. And once you have that, then you can kind of, okay, how much can I really invest in sales and marketing? And, until you've really gone through that effort, you're really shooting in the dark, and you're probably doing yourself a disservice. So knowing what your numbers are from a profitability point of view, and then eventually what is going to be your customer acquisition costs and your lifetime value, and all those numbers, so that you have the right LTV to CAC ratio are super important.
Totally. No, I couldn't agree more.
Gosh, well, this was a great conversation. Thanks so much for sharing all this, Baxter. And also, Baxter, if listeners want to connect with you or alternative payments, what's the best way to reach you, would you say?
Yeah, I mean, so you can reach me always. My email's baxter@alternativepayments.io. Our website's alternativepayments.io. Or feel free to text and call me. My cell phone number is 917-744-6597. I really mean it. I really enjoy talking to customers, prospects. I really enjoy learning from you all. So please reach out if I can be of service or be of help. Don't hesitate. But yes, Justin, Pierre, thank you so much for having me. This was really, really a great experience, and hopefully the audience learned a lot.
Right. And for those listening, if you enjoyed this episode, subscribe to the $5 million Milestone podcast and share this with other MSP owners that are looking to break through the market. And let us know what you learned in the comments. And until next time, keep pushing boundaries, embrace change, and keep chasing that $5 million milestone. Thank you, Baxter.
Awesome, guys. Thanks so much.